What an amazing 3-week stretch that we've just finished in the market. What's next? Welcome to the Ready Set Trade Market Minute for Saturday, the 12th of November. What happens next in this market is really going to be dependent upon which index that you're watching. Here's the S&P 500. This is the broadest array of stocks that we have. And what I'm seeing right now is the price is breaking higher. We have a daily uptrend, and it's approaching what I think is a confluence of resistance up here at 4,100. So I don't expect to see this get through 4,100 on the first try. So we probably will see the S&P get up to 4,100. And then if it's bullish, we will see it actually flag out up here. So a small horizontal coil, which is going to be a bull flag, that will be very bullish if that consolidates under 4,100 for a short time, perhaps a week or so. Now, what happens after that will depend on whether or not we come down, first of all, and maybe retest the breakout level from this, and then whether or not we break higher, or whether we see the price come down and set up a lower high and undercut 3,900. So 3,900 as an undercut would be extremely bearish, probably leading to a break down from here, maybe even retesting the lows or lower. Although a break above 4,100 would be extremely bullish for the S&P 500. Here's the Dow. The Dow has actually been super strong. Now, this really does compare to what we saw happen in 2000 when we had the NASDAQ tech bubble. And so the NASDAQ got destroyed while the Dow held fair value pretty well, only selling off at the very, very end. But that possibility would be severely decreased if we see the price get above this pivot here and start to trade well above 34,500 on the Dow, and especially if it sets up a major higher low followed by a higher high. So we've seen a very, very strong short covering move off the bottom. If that sustains itself with more higher lows and higher highs, the bear could be over for the Dow in the short term, especially if it trades above 34.5K. Now on to the NASDAQ 100. This is going to be the Achilles heel of this market, but also represents the biggest opportunity because it's been so sold off. So the price has come down to test the 61.8% retracement of the entire after pandemic rally that we've had. So this is typically the level that we've got to see hold. Otherwise, if we see it break below 10,500 and that 61.8% retracement, that means the probabilities have increased for the price to fill in the entire triangle, and for the NASDAQ 100 to go back down to 7,000. Again, guys, this is pretty much what happened from 2000 to 2002. We're seeing the same kind of thing happen again, kind of driven by the same thing. Although back then, NASDAQ stocks didn't really have any earnings. They didn't really produce anything at all. And so it was all vaporware. It's quite different these days. So I'm not sure if we're going to see a repeat of exactly the same thing. So with the NASDAQ, to me, if the NASDAQ is able to trade above 13,000 on the NASDAQ 100, that means that this series of lower highs and lower lows has been broken. The price is trading above the 200-day moving average and is gotten above the 38.2% retracement. That would be very, very bullish to see that happen in the meantime. However, that is a pretty tall order for this to occur. So we'd have to see this thing tack on. We'd have to see major tech stocks like the Googles and the Metas and the Apples and the Microsofts and the Amazons. We'd have to see them just rocket higher to get above that 13,000 level. And then what would be next is about 13,700. So watch that in the short term. Right now, I'm giving more odds to the Dow just due to the strength. And right now it seems to be that the NASDAQ's on the back heel, probably going to have a very difficult time getting above that 200-day moving average, as well as this descending trend line, which is at confluence in the same place. So we may get a short-term rally here, but watch very carefully what happens around there. We'll be watching that into the end of the year. That's it for today's Market Minute. Thanks for listening. We'll see you in the next one.